if any person satisfies any one basic and any one additional condition, then that person will be called as not ordinary resident of India. We have three categories of residential status, that is the ordinary resident, not ordinary resident and non-resident. Indian income is nothing but any income received, accrued or arised in India that is considered as or that should be considered as Indian income. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to this new session. In this session, we'll be discussing about unit number 2, session 1. So the unit name is Residential Status and Incidence of Tax. So in this particular session, dear students, we are going to deal with theoretical aspects with respect to the residential status of an individual. So what is residential status? How many types we have and under what section we are going to study that? Everything we are going to discuss in this particular session. So if you look into the meaning of this residential status of an individual, here it says like this. So the tax liability of an individual in India depends upon its residential status. Yes, if you are taxing any person's income or if any person is liable to pay tax to the government, so the tax liability will arise only after knowing its residential status of that particular person in India. If he is a resident or non-resident or not ordinary resident, okay. Based on this residential status, we are going to impose the tax on the income earned by a particular person. So tax liability of an individual is dependent on the residential status of an individual person. The term residential status has been coined under the income tax law of India and must not be confused with the individual or citizenship of India. So here residential status and citizenship, these two are different. So citizenship is different, residential status is different. So here what will happen, we'll get confused between the residential status and the citizenship of India. So citizenship is different, resident is different. The person who is citizen of India, he need not to be a resident of India. Or the person who will be considered as the resident of India, he need not to be the citizen of India. For example, a foreigner, okay, a foreigner is not the citizen of India, but he can be the resident of India for a particular financial year or for a particular year, okay. Or an Indian person or Indian resident, he can't be a citizen of India if we go and stay in abroad. So here citizenship is different and residential status is different. So here we will be discussing about the residential status of an individual, whether he is an Indian or he is a foreigner. Okay. So to determine whether he is a resident or non-resident or not ordinary resident and to impose tax on whatever the income he earns. So for that we have set of rules and regulations. So before that, in residential status, mainly we have three types. So which are those? The first one is resident of India, that is the ordinary resident of India. Second one, not ordinarily resident of India, that means is not a ordinary resident. Okay, ordinary resident is different, not ordinary resident is different. And the third one is non-resident of India. So under residential status of an individual, we have three categories. That is the resident of India, not ordinary resident of India and non-resident of India. So how to determine whether he is a resident or whether he is a not ordinary resident or non-resident? So to determine this, residential status of an individual person under section 6 of the Income Tax Act 1961, we have set of rules and regulations. Based on how an individual fulfills the conditions, on that we are going to discuss or we are going to decide whether he is a resident or not ordinary resident or non-resident of India. So then which are those conditions we have under section 6 of the Income Tax Act of 1961? So if you look into the conditions, we will be having basic conditions and additional conditions. Yes, to determine the residential status of an individual person, we are going to follow this conditions. So these conditions are given by the Income Tax Authority. These 4 conditions are given by Income Tax Authority. Based on this condition, we are going to determine whether that person is an ordinary resident or not ordinary resident or non-resident of India. For example, here we have two basic conditions and two additional conditions. So which are the two basic conditions? The first one is resides in India for a minimum of 182 days in a year. Yes, a person, if he is residing in India for 182 days or more in the previous year. And the second basic condition is resided in India at least for 365 days in the immediately preceding 4 years. Yes, he resides for 365 days immediately preceding the last 4 years and for a minimum of 60 days in the current financial year. Okay. The first basic condition is resides in India for a minimum of 182 days in the previous year. The second basic condition is 365 days in last 4 previous years and 60 days in the previous years. These two are the basic conditions. Okay, I hope all of you got it. The first one is 182 days in the previous year. Second one is 365 days in last 4 previous years and 60 days in last financial year, that is last or the previous year. So next, additional conditions. So which are those additional conditions we have? The first one, he has resided in India for at least 2 years out of 10 years. That means a person should be in India at least for 2 years out of last 10 previous years. And the second condition, second additional condition, he has resided in India for at least 730 days out of 7 previous years. So these 4 are the conditions what we have in order to determine the residential status of an individual person. So the first two is, the first basic condition is what? He should be in India at least for 182 days or more in the previous year. Second basic condition is 365 days out of 4 years or 60 days out of the last previous year. In additional condition, the first one is he has been in India at least for 2 years out of 10 previous years. Second additional condition is 730 days out of 7 previous years. So here, how to determine the residential status of that particular person? In case, if any person satisfies both the additional condition, okay, if any person satisfies both the additional condition and both basic conditions. So if any person satisfies one or both the basic condition and both additional conditions, okay, if any person satisfies both or any one of basic condition and both the additional condition, that person is called what? Ordinary resident of India. That we'll call in short OR, ordinary resident of India. If any person satisfies any one of the basic condition or both the condition along with both the additional condition, any one basic or both the basic plus both additional condition, then that person will be called as ordinary resident of India. Next, if any person satisfies any one basic condition and any one additional condition, okay, if any person satisfies any one basic and any one additional condition, then that person will be called as not ordinary resident of India. Not ordinary resident of India. Next, if any person fails to fulfill the basic condition itself, okay, we have 2 basic conditions. If any person fails to fulfill the basic condition itself, then that person will be called as non-resident of India, that is NRI. Okay, if any person fulfills any one basic condition or both the basic condition and both additional condition, he will be called as the resident of India, ordinary resident of India. If any person fulfills any one basic and any one additional condition, then he will be called as the not ordinarily resident of India. And if any person fails to fulfill the basic condition itself, then that person will be called as non-resident of India. So by using these 4 conditions, this is how we are going to determine the residential status of an individual person. So moving further, here we have a chart that is determination of tax incidence. That means we have three categories of residential status, that is the ordinary resident, not ordinary resident and non-resident. Okay, if you are earning a income, just you are supposed to classify that whether it comes under the not ordinary resident, non-resident and resident of India. Okay, mainly we have three, that is resident, not ordinary, non-resident. Whether that income is taxable in three residential status or only in one or only in two or not at all taxable, that we are supposed to determine. So to determine that, this table is going to help you. Okay, here income, we are going to earn some income. So we are going to earn income in two different types, that is the Indian income and foreign income. Okay, we will be dividing the income into two types, that is the Indian income and the foreign income. In case if it is an Indian income, for example, interest received from Bank of Baroda, or salary received in MYSURU, or salary received in Vidhyaashram college. Okay, so this income is received in India, right? So if any income received, accrued or arised, any income received, accrued, arised or brought to India, that income is taxable in all the three residential heads. Whether you are a resident, not ordinary resident or non-resident, it is taxable in all the three cases. Okay, if you are receiving any income in India, whether the income is accrued, arised or brought to India, then that is taxable in all the three residential cases. Next, if you are earning any foreign income, then again we are going to divide the foreign income into two, foreign business and foreign other than business. If they particularly mention that if any income they received from foreign business, then the treatment is different. If they receive other than foreign business income, like say dividend received or interest received or any kind of amount received from foreign, as a gift they are going to receive from foreign. So foreign other than business income, then the treatment is, it is taxable only in the ordinary resident head and it is not taxable under not ordinary and non-resident. Okay, so only the resident part will be taxable, not ordinary and non-resident, it is not taxable. That means only here we are going to write the amount, here we are not going to write the amount. So if you are earning income, if it is a foreign income, that to foreign other than business, then it is taxable in first head and it is not taxable in the next two heads, that is not ordinary and non-resident. Next, if it comes to foreign business income, if the foreign business income is controlled from India, if the foreign business income was controlled from India, then here in the first two heads it is taxable, in the third head it is not taxable. So which are those first two heads? That is ordinary resident, not ordinary resident, this is non-resident of India. So in first two head it is taxable, the third head it is not taxable. In case if the foreign business is not controlled from India, then it is taxable, not taxable, not taxable. That means only in the first head it is taxable, second head and third head it is not taxable. So based on the source of income, we are going to determine whether it is taxable in all the three heads or whether it is taxable in only two heads or whether it is taxable in only one head. So by using this particular, the chart, you can easily solve the problem. Moving further, here we have few incomes where whether it is taxable or not taxable. Okay, so here income received in India. So before that, this is the format what we are supposed to put in order to calculate the gross total income of an individual person. Particulars: ordinary resident, not ordinary resident and non-resident. Okay, so the first point, income received in India. Income received in India. So here you can see in the previous one, income received in India, it comes under Indian income, right? So taxable, taxable, taxable. So here you can see taxable, taxable, taxable. That means if he is receiving 5,000, what he will do? In all the three columns you write 5,000, 5,000 and 5,000. Finished. Okay, I hope you got it. The second one, income deemed to be received in India. Okay, that means the income is deemed to be received in India. That means whatever, you have to assume that the income is received in India. If it is deemed to be also, it is taxable, taxable, taxable. If the amount deemed to be received in India is rupees 10,000, then what you will do? You will write 10,000, 10,000 and 10,000 in all the three columns. That's it, finished. Next, income accrues or arises in India. Again, what is the treatment? Yes, here you can see any income accrues, arise or received in India, it is taxable, taxable, taxable. So here what you have done? Taxable, taxable, taxable. Next, income deemed to accrues or arises in India. Yes, it is also taxable, taxable, taxable. Next, income accrues or arises outside India. Outside India, that means it's a foreign income. So here it is a foreign income, but in the problem they have not mentioned it is business anta. So what we are supposed to consider? We are supposed to consider it is other than foreign business. Okay, other than foreign business. So what is the treatment? Taxable, not taxable, not taxable. So here also we have done the same thing. Taxable, not taxable, not taxable. Next, income accrues or arises outside India, but the business is controlled from India. So what is the treatment? Taxable, taxable, not taxable. So here it's a foreign business income and it is controlled from India. If it is not controlled, taxable, not taxable, not taxable. If the business is controlled from India, taxable, taxable, not taxable. The same treatment we have done here also. Taxable, taxable, not taxable. So this is how you are supposed to treat the different incomes under different heads of residential status. So let us solve one problem with respect to this so that we will get to know how to solve the problems with respect to the residential status of an individual. So first problem, from the following details, calculate the total income of Mr. Kiran if he is a ordinary resident, not ordinary resident and non-resident of India. That means under all the three heads we are supposed to compute. Dividend received from Indian company, that is dividend from Indian company. So if any Indian income, okay, if you are receiving any income in India, what is the treatment? Yes, taxable, taxable, taxable. Any amount received in India, any amount arised in India, any amount accrued in India or brought to India, or any income deemed to be Indian income, the treatment is taxable, taxable, taxable. Very easy. Second one, dividend from foreign company rupees 1,50,000 but received in India. It is a foreign income but it is receiving in India. So what is the treatment? Yes, taxable, taxable, taxable. Because the amount is received in India. In definition only we have Indian income is nothing but any income received, accrued or arised in India that is considered as or that should be considered as Indian income, then it will be taxable, taxable, taxable in all the three residential heads. Next, income from business in Kenya but controlled from India. Okay, it's a foreign business but it is controlled from India, right? It's a foreign business controlled from India. So here we have, if it is controlled from India, so what is the treatment? Taxable, taxable, not taxable. So what we are supposed to write here? Taxable, taxable, not taxable. Next one, income accrued in Switzerland. Okay, income accrued in Switzerland, 2/4 or 2/5 received in India. 2/5 received in India. That means in 2,50,000, 2/5 of amount is received in India and remaining amount is received in Switzerland itself. That means in this total 2/5 is taxable, taxable, taxable. So 2/5 amount is taxable, taxable, taxable. The remaining 3/5 is taxable, not taxable, not taxable, because the 3/5 remaining amount is received in Switzerland itself. It is not brought to India. Next, income from business in Indonesia but controlled from Bangladesh. So Indonesia is also a different country. Bangladesh is also a different country. Both are not the Indian states or cities. So It is a foreign income. It is a foreign business income, but it is not controlled from India. So what is the treatment? Taxable, not taxable, not taxable. Okay. So we will solve the problem. Calculation of taxable income of Mr. Kiran. Particulars: ordinary resident, not ordinary resident, non-resident. This is the column you are supposed to use. First one, dividend from Indian company. Dividend from Indian company. What is the amount? 1 lakh. So dividend from Indian company, it is an Indian income. So it is taxable in all the three heads. So what you are supposed to write here? 1 lakh, 1 lakh, and yes, here also you are supposed to write 1 lakh. First one finished. Second one, dividend from foreign company, but received in India. So any income received in India, it is taxable, 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 right? So what is the amount? It is rupees 1,50,000. So in all the three columns, you are supposed to write 1,50,000, 1,50,000, and 1,50,000. So what is the third point we have? Income from business in Kenya, but controlled from India. The business is in Kenya, but it is controlled from India. It is controlled from India. What is the treatment? Taxable, taxable, not taxable. So here you can see income from business in Kenya, controlled from India, is rupees 2 lakh. Treatment is taxable, taxable, not taxable. So amount 2 lakh. So first column 2 lakh. Next, under not ordinary also 2 lakh. Under non-resident, it is nil. We will not write the amount because it is not taxable. Next one, income accrued in Switzerland. The income accrued in Switzerland is rupees 2,50,000, right? It is rupees 2,50,000. In that, 2 by 5th brought to India. 2 by 5th brought to India. That means the 2 by 5th amount belongs to India. So what is the 2 by 5th of 2,50,000? It is 1 lakh. So this 1 lakh is taxable in all the three cases. 1 lakh, 1 lakh, and 1 lakh. I hope all of you got this. Next, remaining 3 by 5th. 3 by 5th. It is received in Switzerland itself. It is not brought to India. So what is the 3 by 5th of 2,50,000? It is 1,50,000. Then it is taxable only in the first residential head. In the remaining two heads, it is nil because that is received in Switzerland itself. So it's a foreign income, but it is not a foreign business. If it is foreign other than business, what is the treatment? Taxable, not taxable, not taxable. Next, income from business in Indonesia, but controlled from Bangladesh. So both are different countries. It is not controlled from India, it is controlled from Bangladesh. So what is the amount we have? Rupees 5 lakhs. So the treatment is taxable, not taxable, not taxable. So I'll write 5 lakh here in the first column. How much? 5 lakh, nil, nil. Second column nil, third column nil. Now total all the three columns. So 1 lakh plus 1,50,000, 2,50,000 plus 2 lakh, 3,50,000 plus 4,50,000, 4,50,000 plus 1 lakh, 5,50,000. Next 7 lakh, 7 lakh plus 5 lakh, it's 12 lakh. Okay, it's 12 lakh. The first column total is 12 lakh. Next year 1 lakh plus 1,50,000, 2,50,000 plus 2, 4,50,000 plus 1 lakh. Second column 5 lakhs. Third column is how much? 1 lakh plus 1,50,000, 2,50,000 plus 1 lakh, 3,50,000. That's it. So if he's a ordinary resident of India, then he's supposed to pay tax on rupees 12 lakhs. If he's a not ordinary resident of India, he's supposed to pay tax on 5 lakhs. If he's non-resident of India, then he's supposed to pay tax on 3,50,000. So this is how we are supposed to solve the problem and to find out the answer under three residential heads of income if that person is earning any income in India or from outside India. So with this, I'm going to wind up this session. I'll come up with few more new topics and with few more problems with respect to tax incidents. So until then, thank you all. Have a nice day. Namaste.